Hey, good morning. Let's go over today's trade plan. So in the overnight session, we saw that responsive buyers were active at the 90 to 92 support area, which was the initial support zone from Thursday. And after bouncing in a range, we saw a overnight breakout above 95 quarter. So at this point, heading into the open, if the market is holding above 95 quarter, it would open the door for some continued upside. And immediately above it, we have 98 quarter, 2100 quarter. That's an important inflection point, and buyers would have to push ES through that zone in order to confirm that they're now regaining control. If we continue holding below pre-market resistance and we fail to hold 95 quarter, then that doesn't really bode well for the buyers at this point. So bigger picture, we know that there's a disconnect between the Russell and the S&P, where TF is still holding up quite well and it's maintaining its recent breakout to new all-time highs, which is short-term bullish. But the S&P has been relatively weak and essentially retraced the entire breakout and actually came down to the towards the high volume area of the balance that it broke out from. So at this point in time, this disconnect is really going to be important to monitor, because anytime you have this big of a disconnect between these related markets, usually that resolves with a decent directional move. Now, it doesn't have to be to the upside, but if we're holding 95 quarter and if Russell is holding above its overnight balance and it's holding the 79 to 80 area, then most likely buyers are just going to continue pressing higher. But if Russell fails to hold the 1279 to 1280 area and we start seeing some strong selling and a failure of 95 quarter, and we're going down on some pretty decent momentum and very negative internals, then the Russell can just catch up to the S&P and move lower, right? So anytime you have this disconnect, it resolves with a directional move where one market then catches up to the other very quickly. So one option is that the S&P holds above 90 half, 92 half, above 95 quarter, and then puts in a catch-up move to the upside, and Russell continues to hold above 79.80 and starts moving higher too, right? That's scenario one. But it doesn't mean that we want to be blindsided to the other side. If we're not seeing that upside strength and Russell fails to hold 79, then it can be a catch-up move in the Russell where TF starts selling off and ES continues heading lower as well, and that's how the markets come back into alignment. So we're still open to either side, but as long as we're holding above 90 half to 92 half, and especially 95 quarter, the buyers still have potential to jump in here, but they would have to break ES above 98 quarter to 2100 quarter in order to confirm that they are actually regaining control. Until then, this market is pretty much stuck in balance, and short term, the sell side has been more dominant over the last few days. So we still have to be very nimble and very flexible with our bias, because even now the market can really go either way. What we do know is that we can still get some decent directional movement. Now, in order to get any decent range and expansion and volatility, we would have to see a pickup in volume. So at this point in the overnight session, the markets are running at about 80 to 85% on the relative volume chart, and we would want to see the volume expanding as well, and that would support the idea of at least a decent range on the day time frame. The other thing to keep in mind is that Greece is really the primary driver right now, the main catalyst that the market's focused on, and we don't really have any resolution on that. At the same time, we're heading into the weekend, so there's some risk over there, right? Because there's a meeting tomorrow where there should be some resolution on Greece, but as you've seen all week, things have been just continue to push further down, and who knows if we're going to get that resolution or not. So heading into the weekend, there is that risk on the table too, and simply because of that, we can still get sellers active on first test of the resistance zones above. Now, if we break out above 98 quarter to 2100 quarter, short term, that's bullish, but sellers can still be active at 0575 to 775 and 12 to 13 half. It's just going to depend on the type of underlying strength we're seeing in the market. Is the Russell just rallying higher? Are we seeing a strong advanced decline reading? Is the NYSE tick showing a sustained upside momentum? If that's the case, then we don't have to stop at 0575 to 0775. We can head higher into the 12 to 13.5 area, and in the event of a very strong move, 16.5 to 18.5 would come into play, but we would have to see some very clear signs of strength in order for that zone to come into play. The 0575 to 0775 and 12 to 13.5 are the higher probability targets in the event of a breakout above 98 quarter to 2100 quarter. And again, until we actually get that breakout, we still have to be very flexible, because right now, the sell side still has chance to take over too. And short term, holding below 98 quarter, 2100 quarter, it means that our bias needs to be fairly neutral, and we can't really be overly bullish either. At 90 to 92, it made sense to be bullish. It was a very good support zone. TF was at support as well, but at this point, we want to see it ideally holding above the 94 previous close, above the 95 quarter overnight breakout. And if you're not holding the 95 quarter, then the overnight break ends up failing, and that brings the 90 half to 92 half into play again. Now, in order to get a decent downside push, we would have to see some decent weakness on the internals as well. Similar to the upside, in order to get a directional move to the downside, we would want to see some clear signs of weakness on the advanced decline. So if we open and, let's say if we're opening on an open drive lower and the AD is extremely weak and Russell starts, liquidating below 79 to 80, then ES can go much lower. It doesn't have to actually stop at the support zones anymore, because the 90 to 92 has essentially already been tested and it has already provided some pretty nice reactions. So now when we go down to it, we are going to have to see something in the market in order to trade that zone again, because we have already gotten like 2 or 3 reactions off the zone, and pretty decent reactions off the zone. So at this point, ideally, we don't want to see the market going all the way back down to 90 half to 92 half again. And if it does go there, and it does so in a way where it's going down on strong momentum and AD is very weak and Russell's cracking below the 79.80, then it's probably going to be better to sit back and wait, or possibly get on board for even a short side trade into 86.88 and possibly even 80.82. Now, the 86.88 area is a really larger time frame, high volume node area as well, and we can get some rotation and some rejection off of that too, especially if the Russell is still holding above its breakout to new all-time highs, which is around the 72 to 74 zone. So 86.88, buyers can still be active, but again, we are going to have to see something in real time that is telling us that this is not a trend down environment, that this is not a long liquidation type environment, in order to take a fade setup at 86.88, which means that the AD line can't be extremely weak when we head down there. The NYSE tick should not be printing extreme values on the downside as we head into 86.88, and then that zone can be considered as a long. Otherwise, it's going to be better to wait. So you can see that the way the market is shaping up right now, we do have to be very cautious on both sides, and we have to be very flexible and nimble with our intraday bias. Taking the weekend dynamics into account, the news, the Greece issue, and then heading into the weekend, our traders really going to want to put risk on and hold it into the weekend. That question comes into play. So there is a lot of reason for the market to show indecision, right? And that's exactly why, even if you get a break above 98 quarter, even though the buy side is then in control on the day time frame, the 0575 to 0775 may still actually provide a reaction, and then the 12 to 13 half might actually end up capping the upside. So, we are going to have to play a tighter game as far as entries and exits go, right? If you're seeing any warning signs and the market is hitting a decent target, probably a good idea just to take the trade off instead of trying to press it and trying to get just a little bit more out of it, right? So that's the type of market we're in. That's the context that we're currently trading in. Not every day is going to be the same. So, we just have to be adapting to the changes in the market and make sure that we're just very aware of the market environment that we're currently trading in. So keep an eye on the relative volume to see if a wider range day is really even a possibility today. If not, then we know that bigger picture, the market's simply balancing in a range. And when you are within a balance, typically you can move from one zone to the next, but then you still get responsive activity at that next zone. So keep that idea in mind. Off the open, see, are we setting up for a trend down day? If not, then by default, the buyers are currently in control and we can head higher. So those are our main ideas heading into this morning. I know it's a bit of a long trade plan video today, but we are in a bit more of a complex environment right now. So I just want to make sure that everyone's aware of just how things are set up and that we're able to avoid any possible traps that the market presents today, and we're taking all the factors into account and really only focusing on and taking the most selective and high quality setups. And if there's not a lot of clarity in the market, right, if things are very mixed and you don't really know which way it's really leaning and which side's in control, then the best thing is going to be just to wait for a high quality, high probability, high reward to risk setup. And if that doesn't happen, it's still better just to sit out rather than getting involved with no real conviction behind the trade idea. So those are our main thoughts. Let's see whether the buy side can maintain control above 95 quarter and then break out above 98 quarter, 2100 quarter. That's going to be the primary scenario, but again, still going to have to be open to a downside move if the Russell starts failing. So let's see if the buy side can maintain control, and we'll take it from there.